Hola mi gente, on today's video, I'm going to show you how to trade put options like a pro. There is no question that the stock market right now is in a bear market. Stocks are dropping and boy are they dropping fast. If you take a look at the S&P 500, we're down around 15% peak to trough. If you take a look at the NASDAQ 100, from the highs, we're down around 25%. And that doesn't even do justice to how bad the stock market has been. If you take a look at some stocks, and these are some big name companies, companies that we all know, companies like Amazon, companies like Netflix, companies like Disney, they are down a ton. And if you take a look at some of the more favored stocks, or we can just take a look at the ARK ETF, well, that stock, that ETF has been absolutely slaughtered. Taking a look at the ARK ETF, in that ETF, the biggest holding is Tesla. Tesla has been one of the best stocks in a decade. The returns on that stock are phenomenal, and Cathie Wood and ARK Invest were overweight Tesla before that run up. So they had massive returns. Now they still own Tesla in their holdings, but they've been trimming it and buying some other stocks that just haven't performed. So to see that run up in the ETF be completely wiped out, and now we're back to the levels we were before that massive run up, is just crazy. It's like investing in Bitcoin before Bitcoin took off and then selling all of your Bitcoin and putting it into a cryptocurrency like SafeMoon and see your returns just get slaughtered and then you're back to root one. That's what's happened with the ARK ETF. All of the returns have been wiped out essentially. So there's no doubt that we're in a bear market and people are reacting all kinds of ways. Some YouTubers have completely left the platform, are no longer talking about stocks. Some YouTubers made a complete switch over to stocks to crypto because they thought crypto would last. And some YouTubers are trying to play this game where they're saying that they're not buying any stocks, they sold out of their portfolio completely, and they're trying to time the bottom, and then they will upload videos saying that they're back in, and the stocks continue to fall, so they sell out again, and they keep doing this process until eventually they will be right, and then they can say to their viewers, look, we timed the bottom. That is definitely not something that I recommend because when you buy in and sell out, then you're subject to that wash sale rule. And also, it is very difficult to time the market that precisely. It's just not the kind of advice I would give you guys who are part-time traders, part-time investors, you're retail investors, you do this on your spare time. So I wouldn't give that advice to you. And even professional traders and professional investors, they don't even do that. However, a good piece of advice is if you are staying long in the market to hedge yourself a little bit, and you can hedge yourself in a bear market by playing trades to the downside. So you capitalize on that downside movement in those stocks. And the best way to do that is through put options. I'm not recommending shorting any stocks because with a short, you have unlimited risk. But with put options, risk is defined. So it's a great option to try to hedge yourself and to make money in this market, which you can still make money in. Nobody ever said that you can't make money in a bear market. And that's what I'm going to try to show you on this video. So we're not playing the game of trying to time the market. We're just using the market to our advantage. And we will hedge our longs by playing the momentum to the downside. Now to show you how to trade put options like a pro, I'm going to go over a trade that I posted on the Discord. We are no longer in this trade, but I think this trade really shows you how to trade put options and what I'm looking at. This trade was posted on the private Discord, so everyone on there got notified about this opportunity. If you want to get trade alerts, you just have to join the Discord via the Patreon, which a link is provided down below in the video description. It's a community where we learn together, grow together, and make money together. And I post trade ideas like this all the time on the exclusive member activity channel on that Discord server. Now the trade was buying a put debit spread on the XLU, and the returns in just under a month were 160% returns. We'll dive more into the trade when we get to that portion of this video. You'll see everything that went on with that trade. The title is How to Trade Put Options Like a Pro. There are many ways that somebody could be trading put options, but in this market in particular, there's a good way and then there's a bad way. A beginner or a noob would buy a put option when there's high implied volatility. They're probably buying a short-term option and they are subject to theta decay and they have a low probability of success. When trading options, you have to know what's going on with implied volatility and you have to consider theta. And in this market, with it being so volatile and having VIX readings that surpass 30, implied volatility is going to be high for most trades. So with that being said, in this market, a pro would buy a put debit spread instead of buying put options. The reason being is because implied volatility is high. A put debit spread will cut out that implied volatility. Also, vertical spreads, a put debit spread is not subject to theta decay. It lowers your cost of entry, increases the probability of success, and increases your overall returns. If you can buy a put option, it's easy. You will easily learn how to buy a put debit spread. The process is not much more difficult. It just takes maybe 10, 30 minutes to understand the concept, and then you're good to go. You will have to be approved for level 3 options trading though, so check your brokerage to see if you have the capabilities of trading vertical spreads. So what is a put debit spread? Because that's the trade we got into, and those are the types of trades that I recommend in this environment. Well, a put debit spread is basically you're buying a put option, but then on top of that, you are selling a put option against it at a lower strike. Both options are going to be for the same stock, and both options are going to have the same expiration date. Because you are buying one put option and then selling another put option against it, when implied volatility is high and premiums are high, aka options are very expensive, you're going to pay a lot for that put option that you first bought. But then you're also going to get paid a lot for the option that you're selling against it. So you're basically taking out implied volatility. It's not going to negatively impact you. It's like buying a car today in this crazy used car market, but you're buying a car and then you're trading in your car. So you're winning on the trade-in, but you're losing on the buy-in, so it's a wash. Now, the calculation for cost of entry into a put debit spread is basically how much you paid to buy the one option and then how much you got paid to sell the other option. The difference between those is your cost of entry. The max gain on a put debit spread is the difference between the two strikes. So if you buy the $75 strike and then you sell the $70 strike, well, that's a $5 difference. You're going to times that by 100 and your max gain is going to be $500. The max profit is going to be your max gain minus your cost of entry. That's how much profit you can make off of this trade, and that's how you can determine your return on investment. Take your max profit, divide it by your cost of entry, and that's the kind of returns you can get if you get to that lower strike. And the max loss is your cost of entry. You can't lose more than you pay to get into the trade. And because you are doing a debit spread, your cost of entry is going to be less. So your max loss is also going to be less when compared to just a regular put option. So there are many benefits in trading vertical spreads. Now let's go on over to the trade example and I'm going to show you my process. So let's get started. How do we trade put options like a pro? Well, there are some factors that we need to consider before we actually get into a put option. And obviously the first thing is we need to identify a stock that we think is going to drop, that we think the share price is going to decline. Because a put option is a bearish bet, so we need the stock to fall. Now, for me personally, when I get into put options, they're swing trades. And what I like to use for swing trading to try to identify a stock that's going to fall. There are two ways that we could enter into a put option, or two opportunities that we can see. We can see a stock that has been falling and will continue to fall, and we can play off of the continuation of that trend. Another way to do it is we can play reversals. So with that being said, this trade is focused on playing put options off of reversals. So the stock was moving higher and now it's moving lower, aka a reversal. Now, for identifying reversals, there are a few things that we need to consider. There are a few things that we should look at. The first is, and probably the most important, is we want to see some kind of resistance approaching, and we want to see rejection at that resistance. In addition to that, we can use some indicators like the RSI, which is the Relative Strength Index, basically a lower study that helps gauge momentum, and we can see if the stock is overbought, oversold, and if momentum is fading. That would help us determine if a reversal is going to happen or the likelihood of a reversal happening. So using support and resistance lines, pattern recognition, price activity, and indicators like the RSI, that's what we look for. And that's what we use to get into this trade. So the trade was off of ticker symbol XLU, as you know, because I showed you the gains, which were 160% on this put option. If we take a look at the XLU, we can see, or let me back up and show you or explain what you are seeing on my charts. This chart here on the left is the 1 year, 1 day chart. So each candle represents a day. This is a daily chart. What I have here on the bottom right is the 3-year weekly chart. So each candle represents a week. Then I have an hour chart and a 1-minute chart. If you take a look at this stock and you look at the weekly, and you can see that there was a resistance here back in 2020 as indicated by that white dashed line. That's my weekly resistance. If we go back to the daily, we can see that we touched that in December 21. Then we touched it again in March of 2022, and then we finally broke out from that weekly resistance. And that's when we saw that massive move to the upside. Now, that happened to coincide with an RSI value that was close to 80. Now, anything over 70 is considered overbought. And there's a good chance that momentum will start to fade and you'll see some kind of pullback. But just trading off of the RSI alone will not work. We broke out to the upside and now we don't have any other resistance to go off of. We need to see some kind of resistance form, and that's when we can say, yes, momentum is starting to fade. Buyers cannot push past this price. Sellers are starting to take over, and we could see a pullback, and that's when we would want to get into a put option. So if we zoom in on the daily, we definitely hit a peak here. The high was $77.23, and that corresponded with the RSI being in overbought territory. We pulled back a little bit, but we bounced, and then we retest that prior high of $77.23. It was rejected, then we pulled back again. Now, when we get that confirmation, that might be good enough to get into a trade. I would probably get into a trade there. But depending on your style, depending on how aggressive you are, what we have formed here is a double top. And we can wait for confirmation that this prior support indicated by this green line here, which was a support here or which was a prior resistance here. We dipped down a little bit, then we pushed above. A support here as well. When we break through that, this line right here is considered the neckline. Well, then that's extremely bearish. And after we broke through that neckline, you can see that there was a lot of downward momentum. So as a trader, you could have gotten into the stock here where we were rejected at that double top. You could have waited for an additional level of confirmation and wait for that neckline to break and then get into that movement to the downside. Either way is fine. It's a matter of preference. Now, when we get into this trade, we need to identify what would our stop loss be. Well, if we were to break through this high here, that would mean that yes, we had a double top, but buyers came back in and were ultimately able to push above that price. So that would be a point where I would have stopped out of this trade. So let's zoom back and recap why we got into this trade in the first place. And then I'm going to show you the put option portion of this. What we had is a break. So what we had is the stock broke out. It went and it tested $77.23. It formed a double top. It coincided with an RSI level that was extremely overbought. And then we broke that neckline and it kept on going down. And basically it settled back at that prior resistance, which then converts over to future support. That's also something important to know because we're going to use this as where we think the stock will fall to and then ultimately bounce back up. In addition to that, there's a lot that I'm throwing at you right now. If you take a look at the weekly chart, the stock is clearly in an uptrend. So it's unrealistic to think that we hit a here and we're just going to fall all the way back down to 60 something dollars. What's more likely to happen if we follow trend is we have a nice, but we then bounce back up and we retest these highs and probably break them if we continue an upward trend. So now that I'm out of this position, out of this trade, I'm still watching XLU as a potential trade to the upside. I'll let you know if I get into a bullish trade on the Discord server on that activity channel. So now that we understand why I got into this trade, we need to understand why I did a put debit spread instead of a put option and what strikes did I pick. Well, I went back in time via the on-demand function of Thinkorswim, and we're back to April 21st, and when we had that double top formation. Now let's take a look at the options chain to try to identify a good put debit spread to get into, and we're going to use the one that I actually entered into. So we picked the 20th of May expiration date, which is 29 days away. In addition to that, we are looking at the put options. We're looking at the put options chain. The stock is currently trading at $76.69, and we believe that it's going to pull back. Now, how low do we think that this stock is really going to go? Well, like I said, we are going to use that prior resistance at around $72 as future support. So that's basically as low as we think the stock is going to go. The stock is trading at $76.65, so we can either buy the $76.50 strike, we can buy the $76 strike, we can buy the $75.50 strike, we can buy any strike we choose. But of course, the first option that we buy, the first put option that we buy, the closer to at the money we are, the higher the probability that our trade is going to be successful. But it's going to increase our cost of entry. So it's going to decrease our total potential returns. Now, in this case, I felt very comfortable using the $76 strike. It's basically just out of the money. And if we took a look at the charts, we hit that price just a couple days ago. So if we had hit a double top, which we did, and I thought it was going to drop, which I did, I thought the $76 was a good put to buy for the long leg of the put debit spread. The next thing is we're using the $72 as what we think is as low as the stock is going to go. So at expiration, if the stock is below $72, then we are at max gains and max profits. Now the spread between the $76 strike and the $72 strike is $4. Now, how we get into a put debit spread on Thinkorswim is very easy. We're going to right click on the first option, the put option that we're going to buy. We're going to hit buy, we're going to hit vertical. Now we want to make sure that the type is a put. So we are going to buy the $76 put, and then we are going to sell the $72 put against it. And you can see at the time, right now, it would cost us $88. So what we're going to do is we're going to buy that. We'll buy 10 of them just to show you the example. We're going to hit confirm and send, and we're going to send that order and wait for it to get filled. So here we are, the order was filled, and you can see that from our position, we bought 10 of the $76 puts, and then we sold 10 of the $72 puts, and this is our vertical spread. Now, if we fast forward, and let's go to as far as I can on the on-demand function, which is Thursday, May 5th, and let's take a look at our gains. All right, so here we are. It is Thursday, May 5th. This option expires on May 20th, so there's still time. But if we take a look at this option, the stock right now is trading at $71.91. So we're just below $72. We couldn't have picked a better strike based on where the stock is right now. If we take a look at the charts, we did bounce right around that $72. We're hovering around that level, so we picked a good short leg for this put debit spread. We might make max profit off of this trade. We go back to the monitor tab. How much are we up on this position? Now, I sold mine for 160% returns because once we hit that $72, I thought the trade was over, but I was wrong because the current gains on this position are 225.57%. Those are massive returns. We were able to reduce our cost of entry, and that's why our returns are so high. And with that reduction of cost of entry, because of the vertical spread, we're also not subject to an IV crush, and we also do not see theta decay on our put options. When we analyze this trade and we take a look at the risk profile, which you can use on Thinkorswim and other brokerages like Fidelity have this same platform. When we take a look at this, this is going to show us what our risk is for this position, for this vertical spread. Now right here, this is going to be our break even, which is $75.13 essentially. It's our long leg, which is the $76 strike, minus how much we paid. And that's around $75. So that is our break even. If the stock is below $75, we are going to be profitable. Our max loss is going to occur at $76, which is that longer leg. And we can only lose the amount that we put in for this trade. Now our max gains, as you can see here, because the gains flatten out, occur at $72. Outside of that, there's not much else to it. It's pretty simple if you ask me, and it is by far the best way to be trading put options right now in this environment. If implied volatility was low and you were buying put options that were further out and were not subject to theta decay, then maybe it's just best to buy a put option. But buying a put debit spread's not going to hurt you. It's just going to reduce your cost of entry and just increase your probability of success on that trade. In conclusion, we have to take advantage of the market that is presented to us today. It is extremely volatile. A lot of stocks are downtrending. So the probability of a stock to continue that downward trend is high. With that being said, put options are the way to go. But because we have high implied volatility, vertical spreads, put debit spreads are the preferred way to trade to the downside. Like I said, let's use the market that we have right now, to our advantage and make money while we can. Now, if you have any suggestions on some other video topics, please comment down below. Also, do not forget about that Patreon where we post our trade alerts. And please consider hitting that subscribe button, ringing that bell, and smashing that like button so that way you are notified on future videos. I thank you so much for your time. I really enjoy making these videos and sharing my knowledge with you. I have over 10 years of experience trading and investing in this market. And because I run a YouTube channel, I'm constantly doing research on the markets and how we can best perform. But with that being said, it's been real, it's been fun, it's been real fun. And this is We Are Investing, and together we are invincible. See ya.